sir. Yeah,
So,
it is.
guys,
What he do?
back with it.
With another one. You know what I'm saying? Young and Hungry podcast. It's been a long time coming, my brother. It's a good day right now. It's a good day. Firstly, as part of the introduction, we just want to clarify. We do apologize for the inconsistency. We do hear the cries and the comments, and shout out to everybody who's been hitting us up and saying, yo, what's happening with the content? There's just been a lot going on, you know, like, there was this flu that was going on. My brother had it for like 2 weeks, and then I was good. And then when he was good, I had it for like 2 weeks, and then it's just been like that. And I think we also both had like funerals to attend. It's just been like and different weeks, just been crazy things going on. But here we are, you know, by God's grace, and we're gonna deliver the content. We got something really interesting today, so we wanted to start on that and just say, yo, hot is on that, yo. We're gonna be more consistent going forward. You know what I'm saying? Ain't nothing gonna stop us. Winners Club, you already know. Yes, sir. Firstly, I'm Ari, the designer. For those who don't know, sitting here.
Sanele here, guys.
Success with Sanela. You heard. We're going to be talking about something very interesting today. We're going to be talking about net worth. Boom. Yo, net worth is such an interesting thing. We all know about it, like at least subconsciously. It's something that we see celebrities bragging about. We see businessmen bragging about. And we see Forbes always posting about it. Net worth of Elon Musk is in the 200 plus billion. You know, net worth of Jeff Bezos is in the hundreds of billions. You know, and it's just like, yo, what is this thing? It's interesting, you know. We like, yo, this person's balling. But the question is, are they really? Alright, we're gonna get into it. First things first, we're gonna start with defining net worth. You know what I'm saying? I checked in the dictionary. And the dictionary has to say this about net worth. It's the total wealth of an individual, company, or household, taking account of all financial assets and liabilities. So when I hear this, you know, this is a troubling definition because, and this is what we're aiming to really rectify and bring clarity to it. It's a troubling definition because when you listen to the definition, it's the first statement, the total wealth of an individual, company, or household. You know, it's not the total wealth, because as we're going to be explaining going forward, there are aspects that net worth by Forbes or by any Bloomberg or any company that is well known for dishing out these statistics. There are aspects that are not publicly known that contributes to a person's net worth, their real net worth versus what we see on the internet, right? And then we went to and we did research, you know, my brother, and we went towards a better definition of net worth by Investopedia, and this says net worth is the value of the assets a person or corporation owns minus the liabilities that they owe, you know. So everything you own versus everything that you owe. You have an interesting. For those who don't know, can you please explain what assets and liabilities are briefly?
In short, assets is something that puts money in your pocket. Liability is something that takes money out of your pocket. So if something is putting in money in your pocket, it's known as an asset. If it's taking out money in your pocket, it's known as a liability.
Simple as that. Money in, money out. That's all it is. Assets versus liabilities, you know. So it's anything that has a monetary value to it. You know what I mean? Anything that you can trade that's in exchange for money. So if you own a car, that's an asset in terms of financial books. You know what I'm saying? There is another definition of the true asset, which we touch on often, and we're going to touch on it more. And I think it will be interesting in a few minutes to touch into it. But if you own a car and the car is worth 300,000, that asset is included into your net worth, because you, at some point in time, if you were to sell all of your assets, you can cash in that 300,000 if that's how much that it's worth currently, and somebody buys it at the price that it's worth. So it's included into your assets column within your net worth, including your house, including, for me as a fashion designer, a sewing machine, whatever it is that I can sell. You know, there is a asset and a liability according to Robert Kiyosaki, which I believe is a better version of an asset, but we'll touch on that in a different video, right? So a liability is, like my brother said, something that takes money out your pocket. It's pretty like simple. That can be, for a student, it could be school loans, you know, it could be a house loan, it could be a car loan. The interesting thing is you can buy a car and it will be part of your assets, right? But you buy it through funding it via a bank, and you will owe them money on this side. So in that case, you have this asset, which is a car. It's considered an asset because you can sell it at any point in time, and if somebody is able to buy it at that amount, that's the cash that you will get, right? But then you also have the car loan. That's the amount that's going to be dragged out of your account, right? That will be the liability in this case. Yeah, well, and we hope to make this really simple, and I don't want to over explain what assets and liabilities are, but we want to give that pretext. Like my brother said, it's pretty simple. Money in, money out. That's what they are. So the things that we want to touch on to, though, what we want to touch into is something that we watched in very interesting podcast with Penwell, and that's some of the confusions when it comes to net worth. So net worth has some gaps when somebody says Elon Musk is worth 200 billion, just making an example. He's worth way more than that, but his net worth is 200 billion. There's some gaps, you know, there's some information that we don't know, right? So do you want to touch into this, or should I? Okay, cool. So this is how it works, right? This is the gap in it, right? If Elon Musk is worth 200 billion, in order for Forbes to be able to say that, they have to have information provided by Elon Musk or by partners of Elon Musk's financial information in terms of the things that he owns, the assets, right? So if I'm Elon Musk and I want to make my net worth higher, the more assets I declare, including my personal vehicle and including my shares in private companies, etc., I have to submit that information to Forbes and to all the relevant parties in order for them to acknowledge that, oh, he also owns a car worth this much. Oh, he also has shares in a small business, and that business pays him this much. So that's the value of the share in that business is this much. And then that information continues to increase my net worth so that they have that information. But have you ever asked yourself, what happens when there's an expense that Elon Musk has that he doesn't declare? That's the gap. The net worth, and this is the key point of the video, the net worth is not an explanation of how much the person has in their bank. The net worth is simply an explanation of the number of publicly known, in the case of public net worth on the internet, it's the number of publicly known assets versus publicly known liabilities. If I have liabilities that you don't know about, if Elon Musk takes his child to a particular school, and if as Forbes, which is a company, if as Forbes they don't know what school that is that he takes them to, that liability isn't registered in his public net worth. Therefore, the statistics already are off. Let's take it local. Let's bring it back local. Shout out to Patrice Motsepe. That's another example. Worth in, I think last I checked, it was like 2 to 4 billion US dollars. I'm not too sure. Here in South African rand, that's basically about, my maths, 40 to 80 billion rand, right? that in that case as well, they are liabilities and expenses that are not accounted for. They are bank loans that are not publicly known and accounted for. The only person who can truly know his net worth is his accountant, himself, and anybody else who he gives that information to. This is very important. This is very important. And why is this important for the Young and Hungry podcast? Because we're young and hungry people. And sometimes we look at these characters and these people and they seem so far-fetched, so far away and out of reach. And I believe all of us will get to a point where we start making a significant amount of money, finance, capital, whatever you want to call it. And comparison, like we spoke about in the other video, comparison can step in and you can be intimidated by a person's net worth without understanding something that is so much more important: cash flow. That's where cash flow comes in. My brother spoke about cash flow quadrants. I think it was in episode, I think it was episode 3 or 4. I think it was episode 4. You spoke about the cash flow quadrant, right? And then you ask yourself, what is cash flow? So cash flow simply is this. It's the net balance of cash moving into and out of a business at a specific point in time. It can apply for a person, an individual as well. It's the cash moving in versus the cash moving out of your account. And then what's left over will then be profit or expense or a loss, right? So it is possible for a person's, hear me now, net worth, the value of the car they own, the house they own, the shares that they own in companies, and as well as the investments. It is possible for, just to make simple maths, for a person's net worth to be 1 million, right? And then of that 1 million of net worth, they now have expenses unaccounted for. They may have to take their child to a private school. They have a car that is not publicly known about, that is fire. They may have 4 cars. You know what I mean? And they may also have other expenses that are not known, debt that the business has gotten into in order to thrive, etc., etc. And by the end of it all, they take home a personal salary of 20,000. And in that case, we got one person working for a private company as an employee versus a CEO of a company that has a net worth of $1 million plus, and the money that they take home at the end of the month is the same. That is crazy. That is crazy. And like that is crazy. And like mentioned already before, the more important thing that we need to really, as young and hungry individuals, get into is cash flow. How much money do we get into our accounts through the value that we're providing to any market, whether it's you being employed or you being in business? How much money is coming in versus how much money is coming out is far more important in my opinion. I'd like to hear from you though, my brother. What do you think is more important or better?
I feel like financial education is more important, bro. Like investing in your knowledge is far better than having to know these definitions of cash flow and net worth without having to probably invest in your knowledge. Like for instance, you were speaking about things that Forbes and for example Bloomberg Index and stuff like that.
Yep.
They have certain information that Elon Musk does not have, and that Elon Musk is sharing with them, right?
Yep.
So it is very important that when someone grows up, that they really like invest in their education, their financial education, because there are some things that we don't know that the other people know, right?
Facts.
There was this book that I was reading, I forgot what it is called, but advanced advantage, something like that.
But book you are reading?
Yeah, but I'm gonna share it down with you guys in the comments section. It's a great book. It was speaking about things that the real world does not share with the people. And I feel like it is given to us to people. It is up to us to go and find that information out there.
Yeah.
So that's what I feel, bro.
Yeah, and between cash flow and net worth, firstly, not discounting what you said, that is 100%. Financial education is a must. It's a personal responsibility. How can you even want to make money and not understand? Like, it makes no sense to not want to understand it, you know. But and if you don't want to do the research, just stay tapped into Young and Hungry podcast. We'll give it to you for free. You know what I mean? But yeah, what do you think is more important in your opinion? Cash flow versus net worth, and or rather, should I ask this at the end after we explain the advantages of net worth? Let's go into how net worth can be an advantage. Why is it important? So in everything we said, right, even with the example of a CEO versus an employee in a private company, where the salary they take home at the end of the day can literally be the same, but one's net worth is exponentially higher than the other. Even in that example, we're not saying it to bash the value of a net worth. Net worth is important. It has some advantages, and one of them, I'll give as an example, is the access to credit. It is so important because even whether as a business or as an individual, lenders literally like banks, lenders, they scrutinize a business's net worth in order to find out if it's financially healthy. Remember, once again, net worth, if you calculating it for yourself, you and your accountant, those are the two people who are gonna most likely know the true value of your net worth, especially your accountant, right? But as for everybody else, there are certain assets that have to be provided, and then there's certain assets where you have the responsibility to give that information to somebody else. So the advantage of it is access to credit. If I have a net worth of 200 million, I have the capacity I have the likelihood to have access to cash from the bank in around that price range of 200 million. However, if my net worth is only 1 million or 800,000, and I want to get funding for my business for 5 million, it might be a little bit harder to do, you know. So net worth does play a role, and in order to bulk up my net worth in that 800,000 rand example, I might include things like that I own and declare them as part of the business, like the car or a sewing machine or washing machine or even a kettle, whatever it may be, as long as you can justify it legally. Like, that will be a mechanism to have access to more cash from banks. So people who are looking for funding for whatever it may be, whether it's school loans or for business loans, that net worth could be a tool in helping you to access more finance, you know. And on that premise, that's what I asked the question now. That, in your opinion, what do you think is better, cash flow or net worth?
Are you asking me like a personal question, or are you asking me based on financial education that I need to answer and give you the right answer?
I'm on a personal level, your personal opinion.
I feel like cash flow for me is very important. Yeah, I feel like cash flow is very important when it comes to things that like generating income. Like cash flow, I feel like it's something that brings in money within. Like, if you're owning a business, right? Net worth is something that happens within yearly, right? Or it might be a decade. It might be. It's not like a cash flow that is happening within weeks or something that you see on a continuous basis, right?
Yeah.
So I feel like if you can manage your cash flow better, then I feel like you can be an expert in net worth. That's what I think of it. So, yeah.
Yo, that's really the facts.
Personal answer.
Yeah. That's really the facts. That's really the facts. If you ask for my opinion, I think if you had to, as a person still learning about financial literacy, if you had to learn about net worth first, to improve your net worth first, versus in learning about cash flow and cash flow statements and improving your cash flow first, I'll go cash flow all the way, because that's actual cash that you can access right now. You know, that's how to find out, hey, yo, this is draining too much money out of my account. I need it gone, you know. And yeah, like another thing that I want to say, you know, before we close, firstly, don't, if you like what we're saying and you gaining any value from it, which I believe you are, because yo, we don't get taught this. Drop a like, comment, emoji, your thoughts. We really want to engage with you on that level. So shout out to everybody who's been doing that, even on a personal level, even on the streets of the digital space. You know what I mean? But my personal opinion on that is, yeah, cash flow as well. You know, because that will lead to the only the Zulu word is coming to me now. Enjoyelo. What's it? Oh man.
Get used to it, basically.
Yeah, it would lead to the getting used to of checking your financial statements and stuff like that. You know what I mean? So it's a no-brainer really for me. But we'd like to hear from you. What do you think is better? Is there anything new that you took from this video? Do you think that what do you think now about the Forbes net worth list, now that you have a little bit more context behind it? We'd like to hear from you, you know what I'm saying? And even Elon Musk mentioned that he's probably not the richest man in the world. He mentioned it himself because he knew something, you know? There's some Saudis out here, Saudi Arabian cats, who ain't telling y'all how much money they making. That real quiet money. So, yeah. Y'all know what to do. Leave a like, comment. Make sure you subscribe. You know what I mean? As we dish out more value, we'll be out here more consistently. I'm Ari the designer.
Successful Sunday.
Anything to say before we close, brother?
Oh, it was Unfair Advantage, the book that I was reading about.
Yes,
it's Robert
right.
Kiyosaki, Unfair Advantage, guys. Check it out. Quite dope.
You already know what it is.
But it's Successful Sunday, Ari the designer, and we out.
Yes, sir.